Good morning. You're watching All You Need to Know on Bloomberg Quint Live, and I'm Alex Matthew. First, the headlines. Asian markets are off to a negative start after trade tensions between the US and China spilled over to the technology space. The yuan remains at a 6-month low. Global auto major Ford is set to slash over 7,000 jobs as part of its business restructuring process. The exercise is likely to be completed by the end of August. Net profit for Tata Motors halved in the fourth quarter, but surpassed analyst estimates. Muted sales in India, along with problems for JLR, continued to impact performance. BPCL's net profit, on the other hand, surged to the highest in almost 2 years, aided by higher inventory gains. And cross-currency tailwinds are likely to aid Tech Mahindra's fourth quarter performance. The company will report earnings later today. Let's talk about the action on Wall Street, where stocks fell, led by a drop in technology stocks. And the reason for that really is the US administration's crackdown on Huawei technologies, which led a sharp drop in the tech shares. So you'll see that the tech-heavy NASDAQ declined by 1.5%. The other two, the Dow Jones down by 1/3%, and the S&P 500 down about 0.7%. Now, Bloomberg News has also reported that companies like Intel, Qualcomm, and Broadcom will not supply to Huawei until further notice, and that has dampened sentiment further in stocks like Apple, also leading underperformance on the day after HSBC cut its price target on the stock, citing concerns over the trade war. But let's talk about that big issue. It's really the Huawei issue that everyone's talking about. China has warned that it will retaliate after the US blacklisted Huawei technologies. China has accused US President Donald Trump of making politically motivated moves. Stephen Engel of Bloomberg News brings you this update.
Well, they're both digging in their heels, that's for sure. And the problem with increased rhetoric, it leads to increased isolationism, if you will, and more hard-headed approach, perhaps. While the Chinese are throwing out the rhetoric quite heavy right now, with the EU ambassador, Zhang Ming, as you said, coming out with quite pointed comments saying that the United States is seeking illegitimate gains through bullying and blackmailing. This is a wrong behavior, he says, so there will be necessary response. Chinese companies' legitimate rights and interests are being undermined, so the Chinese government will not sit idly by. He called it politically motivated and an abuse of export control measures, and he says that the U.S. government is trying to bring down Huawei through administrative means, and Zhang also urged Trump not to go further down the wrong path. Now, the Chinese Foreign Ministry also had its regular briefing yesterday in Beijing. It said we will have to wait and see in regards to possible countermeasures coming from the Chinese. But a coincidence or not, Xi Jinping, the president of China, visited a rare earths facility in Jiangxi province and highlighted quite heavily, extensively by state media. That really fueled speculation that they could weaponize that rare earth material in this trade spat. The United States imports about 80% of its rare earths needs from China. That goes into everything from automobiles to smartphones. And not surprisingly, if you want to see how this affects the financial markets, a stock like JL Mag Rare Earths Corporation, listed in China, surging by its daily limit yesterday on this news that perhaps this could be used in the trade war spat.
All right, so that's the big talking point, really, when we're talking about the Asian markets as well. Let's get straight to Rosalind Chin, who's joining us live from the studios in Hong Kong. Good morning, Rosalind. Seemingly, a lot of tech stocks are under the weather based on what we've heard overnight and what's happening in the US markets as well.
You are very right there. We have, of course, seen Asian stocks here declining following Wall Street's close. And yes, it is tech stocks and chip makers that really have been feeling the brunt of that. So right now, the MSCI Asia Pacific Index is losing about 1/3%. As you expect, the stocks in Japan are trading lower as well, with the Nikkei down almost 0.5%. And the Topix down about 0.2% at this moment of time. As you've been discussing, yes, Huawei, of course, the big issue here as those trade tensions really ratchet up. Now, we have though seen one particular stock helping the market that it's in because it's a chip stock, and that is Samsung. Samsung right now gaining about 3.5%, and that of course is largely as some investors feel that Samsung may actually benefit from these issues that Huawei has been facing, and Samsung being a very heavily weighted stock on the Kospi is actually helping that Kospi to stay in the green, one of the markets in the green this morning, with the Kospi making gains of about 1/3 at this moment in time. The Samsung stocks are extending gains for a second day. Now, we have in the last few moments been hearing from the minutes from the RBA, and we have seen some headlines crossing the terminal which indicate that a rate cut is likely appropriate if there's no further improvement on the jobs front in Australia. The RBA does say it considered two scenarios where a rate cut was likely appropriate, but it's all really about jobs. The labour indicator showing a mixed picture for the near-term outlook, and they're going to watch the labour market very closely given the spare capacity in the economy. And we, of course, have the RBA, of course, has been under pressure for some time to cut rates. Now, of course, it does look like one is ever more likely, if not imminent, given the latest lines which are coming out from the RBA. Earlier, we had seen the banking regulator in Australia suggesting and proposing lowering the minimum interest rate there that the lenders use to assess whether borrowers can repay their loans, and that had given a bit of a boost to the Aussie dollar rising to about 0.2% to 69.21 to US cents to the Aussie dollar, ahead of those RBA lines coming out. And right now we are seeing those gains in the Aussie pairing right back, the Aussie now at 69.12. So the big change there based on those numbers coming out from RBA. We're also expecting Philip Lowe, the RBA governor, to be speaking a little bit later in the day in Brisbane as well. So movement there. And in Australia, the ASX 200 though is just about flat, but it's still dipping into negative territory, down by 0.06 at this moment in time. Chinese stocks, though, I have to say, are making gains. We've got the Shanghai Composite. It did open a touch lower, but now making gains of about 1/3%. And the CSI 300 index edging up. It's actually up by about 0.5% at this moment in time. So quite a lot of factors there to be watching today. Back to you.
Thanks so much for that, Rosalind. Now, with the exit poll suggesting a favourable outcome for Narendra Modi's government, foreign investors have turned their focus back onto India, seemingly. Sean Taylor of DWS says that while he will not add on to his positions in India, it remains the best long-term investment story. Here's what he told Bloomberg Television in an interview.
I wouldn't add to it. We've already been positioned for the election. It's been quite a turbulent year for politics in India. It started off looking like Modi wouldn't get in, really because he had quite a nationalist agenda. But then after the sort of terrorist issues with Pakistan, he became much more popular. And here we are with him looking like he's going to get more votes than we thought. Let's see what actually happens in the next couple of days when because sometimes the polls can be slightly misleading. But it's good news for India, and it's good news for the economy going forward.
So is it too much to say there's some parallels between Mr. Modi on the one hand and Scott Morrison down in Australia on the other? Sort of a social conservative, but somebody who really embraces economic liberalization and really pro-growth. Mr. Modi came in originally office sponsoring that, having done that in Gujarat. He didn't get it done. Can he get it done this time?
I think actually he did a lot more than the market. He did a lot more than the population probably realises, and I think the market's given it the benefit for the doubt. Particularly the goods and services tax has added maybe 1% onto GDP. The problem is when Modi came in, the market had already rallied. A little bit like now, we've had a very good rally, so we probably paused for a while, but it's a good, safe investment. And we always say it's the best long-term investment in Asia.
When you talk about the populace versus the markets, one of the issues in India, as I understand it, is jobs. They need a lot of job creation. What can Mr. Modi do consistent with what is good for the markets and creating jobs?
In my opinion, he's laid down the foundation of an investment cycle, but he needs finance and the banks to be really strong and sorted out. So the public banks are in a pretty bad state. They need to be reformed. They need capital, and that capital then can be lent, and then we can get the economy going at a lower level.
Can we talk about how India versus Brazil, and that you get the reformists coming in, everyone's super excited, Bolsonaro, that rally will last a year, and then it's like, show me what you got. I mean, is there something we learn from that?
I think India is much more stable, Alex, because you've got the Indian local mutual funds that keep a good floor on the market. Actually, if you look at the development of flows over the last couple of years, they've really been taking money out of property and out of fixed income and putting it into equities, and that's made it more stable.
All right, well, stable. We've looked at the flows. In fact, perhaps to tell you a little bit about what happened yesterday, Agam Vakil is here to tell you all about the trade setup for the day and what's happening in the futures and options space. Agam, on the FII flows, yesterday was positive after 11 straight sessions of selling.
Yeah.
And I think that showed in the kind of interest that was there. Yeah.
Absolutely, Alex. And we haven't seen a single intraday move in possibly almost a decade, because the last time we saw such an up move was, well, perhaps back when 2009 actually. So it certainly is a historic day. Tremendous momentum, something that we were expecting. We just weren't expecting well, such a strong reaction. SGX Nifty for now flat, but that is largely because we did see that 4% up move yesterday, 3.7% to be precise on the Nifty, and we had non-core when it comes to the mid-cap and the small-cap indices, along with the banking indices, which also advanced. Look at the PSU banking index, that's up as much as 8% for now. But ADRs, of course, reflecting those gains seen, and we have gains across the banks, or for that matter metal stocks, or even the Tata Motors. And Dr. Reddy is the only one, for its own specific reason, declining by as much as 6% when it comes to its ADRs. But how about your FI flows? And as Alex was mentioning, well, after 11 straight days, we have an inflow from FIs, something that tells them and gives them confidence that there should be more stability, especially on the back of anticipated political stability. And that's the reason why you have FIs come back into the fore. And of course, DIs, on the other hand, selling stock worth around 543 odd crores. Now, there were very few losers, and as you can see here, essentially the large caps leading the gains, with HDFC, Reliance Industries, HDFC Bank and ICICI Bank, something typical that when you know that foreign institutions are getting into the market, and this is what you get. But moving on, let's also talk about your futures and options space. We did see longs build up last Friday, and it was a continuation of that, which means that confidence has returned into the markets with 2 straight days of increase in open interest, even as the underlying advances. So, well, there you have that strength, and it's the same for the Nifty banking futures too. 22% added in open interest. Here is where you have the real gusto, and I reckon, and as a lot of traders will expect, the bank Nifty to outperform the Nifty in the near term too. And now put call ratio I'll come to that. Now this is as far as your open interest distribution is concerned. 12,000 will still act as a little bit of a challenge. That's the indication of the open interest right now. But in terms of your open interest change, of course, we did see unwinding in some of the upper level calls, and we are starting to see some build up around the 12,200 and 12,300 calls as well. Writing especially on the lower level, it is now firmly getting cemented 11,500 as the one which will give you some support. The wicks came off 16%, and that must be heartening to know for those who are long in the markets. And why? Because despite the fact that the indices moved up significantly, there wasn't as much of an expansion in option premiums, which means that there isn't as much uncertainty, and this rally, at least in the near term, stays. So 16% decline in wicks. And moving on to your put call ratio, surprisingly, it came off to around 1.28. And moving on to stocks, Jet Airways remains in the F&O ban, and we do have Reliance Capital, which is new in the F&O ban. Moving on to other stocks, well, we did see a lot of gains come in, but I reckon United Breweries just may have a bad day on the back of very weak earnings. Cholamandalam, Tata Chemicals, and Chennai Petro, among others, which were in focus. And in terms of unwinding, well, there was largely, short covering, if I can call it that. Adani Enterprises, Bank of India, and CEAT. So a very, very strong day of trade, Alex, and something that we are expecting to continue going forward as well. There may be a little bit of consolidation, but it's largely positive now.
All right. Thanks so much for that, Agam. Well, let's talk about what's making headlines across the globe now. Sue Keenan of Bloomberg News brings you the first word headlines.
We start with the Trump administration, which has moved to block former counsel Don McGahn from testifying to Congress, asserting a broad immunity to testimony requirements as Democrats investigate efforts to curb the Russia inquiry. Now, a statement from the White House says President Trump has directed McGahn not to appear at a scheduled hearing on Tuesday. The immunity claim was also under Presidents George W. Bush and Barack Obama. Official results in Indonesia show President Joko Widodo won last month's election by a double-digit margin. The Elections Commission says Jokowi secured the backing of more than half the electorate and beat his rival Prabowo Subianto by almost twice the lead he had in the 2014 race against the same opponent. Election supervisors also rejected Prabowo's claim of ballot fraud, citing a lack of evidence. On to Iran now. The country is accelerating its production of low-grade uranium. This after threatening to scale back its commitment to restrictions under the 2015 nuclear deal that the U.S. abandoned last year. Now, the semi-official Tasnim news agency quotes officials as saying output of enriched uranium has been increased and that the UN nuclear watchdog has been informed. However, Iran has not raised the level of enrichment beyond agreed limits. Nike, Adidas, and other footwear companies have sent an open letter to President Trump, calling his tariff war catastrophic for consumers, buyers, and the entire U.S. economy. In total, 173 companies signed the appeal, which also went to Treasury Secretary Steven Mnuchin, Commerce Secretary Wilbur Ross, and top economic aide Larry Kudlow. The letter says it's time to bring the trade war to an end. Global news 24 hours a day, on air and at TikTok, on Twitter, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Sue Keenan. This is Bloomberg.
I think more than BS6, there will be many reasons, I think. See, one is, Yatinji, because of uncertainty, the first-time buyers were not really coming to the market. I saw a sharp decline in last 6 months in first-time buyer. Uncertainty, sentiment, whatever you say. But I think now with election happening and government, whatever government comes to power, I think there'll be some sort of certainty. And the first-time buyers will start coming. That normally accounts for 40-odd% of our market. Now that we will be entering into festive seasons, that will again give a boost. Monsoon, we keep fingers crossed. I hope that turns out to be good. Right. So definitely second half should be good. Okay.
Sir, in terms of the BS6 transition, a lot of things are changing. A lot of companies are announcing, rejigging their product portfolios. Small diesel cars will be expensive. So in terms of Tata Motors, how are you positioned and how are you strategizing in terms of placement of a product portfolio? How prices will move up? If you could just give us a flavor as to how is Tata Motors really preparing for that big BS6 transition for the passenger vehicles?
I think, Yatinji, if you'd ask me what is the single most biggest challenge this year you have, I would say BS6 transition. Okay. The environment norms have been changing earlier also, but this time it is based on the date of registration. For 1st April, no registration. What it means is that on 31st March, we have to make all stock zero. So we are actually planning very planned way to reduce stock, not at our own company, but at dealership as well as at supplier to be zero on 1st of April. Definitely it will create a lot of stress in entry-level cars because we understand entry-level cars, diesel prices will go up sharply. Okay. And honestly, today between diesel and diesel and gasoline, difference is only 6-7 rupees. Right. So arbitrage is not good enough for people to justify diesel buying. So we'll see a big stress there.
And sir, one final question. Do you see a substantial amount of mix changing for Tata Motors? You have a very large diesel portfolio. So how will you really, look at phasing out certain variants, introducing new variants? And do you think now customer is more eco-friendly, they will opt out for more petrol cars? And how really does, all of these happen? Because you must have, looked at the marketplace. You expect 10-15% increase because of BS6 in terms of pricing of cars. So how really are you, looking at it from the customer side?
I think, see, first point, I don't think customer buys BS6 or otherwise for eco-friendly reasons. Okay. That's not the thing. Once, since there's no BS4 available, they'll buy BS6. Okay. Second thing is price elasticity is still huge. Okay. Because earlier the advantage, typically if you buy a diesel vehicle, you will break even in 3 years because of price difference. Now forever 8 years, you can go in with BS6 coming, I think you will require forever to break even. So there will be a definite change in decision. And also, Ratinji, once, let's say in 2012, diesel ratio had gone to 32%.
Right.
The difference between diesel and petrol was 32 rupees, so diesel was 62% of the market. Now diesel, petrols are paired. You asked a specific question about Tata Motors. I think 4-5 years back we decided that we'll be very strong in petrol. So unlike most people believe, I think our diesel to petrol ratio is in line with the industry. For example, Tiago, 78-80% is petrol.
BPCL's reported fourth quarter numbers were above the analyst estimates. Now, if you see the headline numbers for BPCL compared to last quarter, the revenues were down by nearly 6.5%, close to 74,000 crore rupees. But its EBITDA and net profit jumped over 6 times to close to 4,800 crore rupees and 3,100 crore rupees. The margins of the company that also expanded to 6.5%. On the operational side, if you see the gross refining margin, now that came in at $2.74 per barrel, while the company's crude throughput and sales were up by nearly 9% each to close to 8.21 million metric tons and 11.65 million metric tons. Now, what aided the fourth quarter? Well, it was mainly the inventory gains and the foreign exchange gains that the company saw. Now, the company reported an inventory gain of close to 356 crore rupees as against an inventory loss of over 3,300 crore rupees in the third quarter. So this was the main factor that aided the fourth quarter numbers. Along with that, the company also reported an foreign exchange gain of close to 275 crore rupees in the fourth quarter. On the balance sheet side, if you see the company's debt, that was higher by nearly 25% to close to 29,100 crore rupees. Now, along with the strong inventory gain and foreign exchange gain, a strong marketing margin, higher volumes, higher other income and inventory gains also aided the fourth quarter. Now, however, some of these positives were offset by higher employee costs and higher tax rate that we had seen in the fourth quarter. Now, other income was up by nearly 14% to close to 1,058 crore rupees, while the company's employee cost was higher by nearly 29%. The company also paid a higher tax of close to 32% in the fourth quarter as against 16% in the third quarter. Lastly, something to cheer for the shareholders, that was the dividend that the company had announced of close to 8 rupees per share, resulting into a dividend yield of close to 2% on BPCL.
Well, what is a seasonally weak quarter is going to be a subdued one for Tech Mahindra coming in for the fourth quarter, considering we are seeing revenues rise 1.7% in dollar terms, and in rupee terms, we're likely to see an uptick of around 1% sequentially. However, we could see a little bit of a contraction in your EBITDA, and which is why we could see EBITDA margins come in by as much as 15.7% against 16.1%. Profits seen down 2.7% quarter on quarter. Now, we are expecting the company to register a high total contract value estimated between $275 to $325 million range. We're expecting constant currency revenue growth of around 1%, but we also see a cross-currency tailwind of around 50 basis points. Again, we are likely to see a pickup in, essentially your communications vertical on the back of 5G capital expenditure. In terms of what we are looking at, keeping an eye on is demand outlook, especially from the telecoms vertical. Also timelines where 5G deals will start flowing, health of the enterprise business, which is key, and updated manufacturing vertical, especially given that we have seen a weakness in the auto sector and how the company has done based on that. Finally, mergers and acquisition strategy as well as capital allocation towards Tech Mahindra. On the whole, we're expecting a very quiet quarter from the company.
Some of the other numbers that you need to watch out for, a weak set of numbers from HEG. If you're looking at the top line actually grew 4%, but there was clear pressure as far as the bottom line and EBITDA was concerned. Profit was down 17%, EBITDA was down also 17% for the company, which means margins of 58% versus 74%. Lakshmi Machine Works also came out with weak set of numbers. Revenues down 22%, profit down 40%, EBITDA down 52%, and margins almost coming at 6% versus 9% last time around. Torrent Pharma coming in much below what the street was anticipating. If you're looking at the top line, the revenues were up 9%, but they had a loss of 152 crores because of a one-time write-off that they had to do for one of the US subsidiaries. EBITDA was up 30%, but that also came in below estimates. The Indian business didn't do well. The US business also didn't do well. So overall, weak set of numbers from Torrent. Jindal Stainless revenues up 2.5%, but look at the profit. Profit was down 80%. EBITDA was down 22%, given the fact that raw material material cost increased significantly for the company. Among the stronger numbers, Dhampur Sugar Mill's revenues were down 4%, but profit was at 108 crores versus a loss of 10 crores last time around, and EBITDA versus at 12 crore last time around, it's come in at almost 180 crores. That's a jump of 15 times. We've seen sugar companies come out with strong set of numbers, so Dhampur was a strong set of number. The OFS for Adani Green Energy starts. The two promoter will sell in close to 8.7 crore shares in the company. And finally, Panacea Biotech probably will react. The US FDA has approved the formulation facility at Himachal Pradesh. The drug that they are selling is a chemotherapy drug, so that opens up a new avenue for Panacea and probably should react positively.
All right, thanks so much for that, Darshan. Clearly, lots of stocks that you have to watch out for in trade today. There are also several stories on the website, BloombergQuint.com, that you should consider reading. First up, ArcelorMittal has told the National Company Law Appellate Tribunal that it will pay 42,000 crore rupees, including a minimum guarantee of 2,500 crore rupees as working capital to acquire SR Steel under the insolvency process. Senior advocate Harish Salve, who is appearing for ArcelorMittal, has also accused the Ruiyas, who are the former SR Steel promoters, of creating hurdles in the resolution process of the bankrupt steel maker. And the Securities and Exchange Board of India yesterday released a framework for the creation of an innovation sandbox. What is that? Well, it's essentially aimed at providing financial technology firms and unregulated market participants an environment to test out their new solutions with market data. All right, that's all you need to know going into trade today. But like I said, there's a lot to talk about before trade actually starts. So do stay tuned. A lot more coming up on Bloomberg Quint.